Aman here from Sage Investors, and this is take 36. About a year and a half ago, just seems like I did this yesterday. I offered up an episode where I talked about my initial early days takes on this whole AI thing. So today it's all about AI and catching up and seeing how it has been evolving from a technology perspective, but also then, as it always is here, from an investing perspective. And so what's happened is it's a lot of things have happened in a short period of time. So I think it's just a good idea to kind of catch up here and get our bearings from a technology perspective and also from an investing perspective to see, okay, does this thing have wheels on it, or is there a runway here to all this? Or are we looking at another dot-com-esque kind of moment? So if you go back, I'm not going to rehash everything I talked about in the past episode, previous episode. I'll just give you the quick takes that I had at the time about the whole AI thing. And at that time, it was really just ChatGPT, and Gemini and Perplexity were kind of around, but not as in the force that they are now. Early days of AI. What was I talking about? What jumped out at me? Well, it doesn't listen to you. Uh, you had to put like numerous prompts just to get it to do what you ultimately wanted to kind of do. It wasn't consistent in that it would do something really cool, but then if you did it 3 days later, ask it to do the same thing again, it would give you a totally different output. And it wasn't very consistent. It wasn't very accurate. And if you remember in the early days, these models were only trained on a finite piece of data, a subset of data. So at that time, if you remember, a lot of the responses we got were, "Oh, I'm only as smart as what happened on January 23rd, 2021." And so that was its universe. And, it was just had a very finite, limited data set to work off of. So it wasn't always accurate and couldn't be always accurate. Um, we had all kinds of issues from a business perspective. We had all these chatbots that were starting to get out there that were giving a lot of incorrect information. We had issues with lawyers just literally cutting and pasting responses from ChatGPT in their briefing notes. Uh, Zoom was one of the first ones to get out there with respect to transcript dictation kind of thing. It was very clunky. It was very clunky. The technology at that time was very clunky. It was just very inconsistent. And from a business perspective, you're going to put your company livelihood or existence on something that's very clunky. At that time, so it was at the time because of this clunkiness and inconsistency, that was sort of like uh, a lottery. It was like a roulette kind of thing. It was like a wheel of fortune. You spin the wheel and you see what response you get. And you really didn't know what kind of outcome you were going to get. And a lot of times I recall, I'm just looking at my notes, I spend more time figuring out the prompts and getting the right prompts and getting the right outputs. And then I could have just done the whole thing myself. Um, and then the other thing at the time was the depth of response. It was very kind of flattish responses. There wasn't really texture behind it. There wasn't that human kind of feel to it. And, it was just very flat. And then the other item, which is still a big item, is the sourcing, is where are they pulling all this information to provide these responses? And we are very much aware that it was, these companies were just scraping books, scraping, copyrighted content like blatantly. It was just like a total steal, scraping websites, and it was very Napster-ish. And I subscribe that it is still very Napster-ish right now. There's just no guardrails around it. Uh, but I think that's changing. I think there is changing. I think people are starting to lawyer up and protect their content. I think it's getting much more aggressive on that side. But it's out there. It's happening quite a lot. And it definitely when everything I it really was a red flag for me to in terms of what I do in terms of I have all kinds of stuff that I'm generating, content that I'm generating for my students And I just don't want random, that I've worked hard for, that I've created. And I'm not just going to let some random, chatbot or some LLM just, yeah, thanks for coming out kind of thing. Uh, so that's very much was out there, and it still is. And then, I think we're still waiting for the social economic kind of shoe to drop on this. We're hearing chatter now that companies are starting to scale back hiring, scale back, especially entry-level jobs. That was starting to get a lot of chatter there, and I think it's getting louder. Uh, this was the vibe. This was what was going on at the time. I'm making it sound like it was 20 years ago. It was a year and a half ago. Uh, so those were the things that jumped out that like were kind of sketchy about this whole thing. But at the same time, I said it quite clearly too that I think there's a lot of promise for this. I think that there are many times when I was using it, it was like, whoa, whoa. I was like, wow, I didn't think you could do that, and I didn't think it would do that. And so at the time, I shared that there is a lot of promise for this. Um, but at that time, I said, I don't think it's ready for prime time. I think it's still very clunky. I think there's still a lot of rough edges around it. And I think it's just limited in terms of the vast scope of data that you, at that time, were able to see. I saw benefits. I saw benefits that I could use in my own practice in terms of, giving me creative ideas for posts, for discussions, for conversations that I could have with clients about investing, and it fed me some stuff, and so that's what I said. Um, and I said also there was a lot of potential for it to be kind of like generating, an assistant kind of format where, I can't be around to coach people every day, but if I had an assistant that I trained in what I know, could it, be a reasonable proxy for that? And I said, yeah, there could be some promise, but again, I don't know if the technology was there to do all of that. So, and then the question I ultimately asked was then, at the end of the day, from an investing perspective, again, very promising, very interesting. Companies were, especially the big seven, were definitely allocating significant chunks of capital at the time to the technology, but ultimately, it's about returns on that capital. And my question at that time was, can you justify valuations? Can these companies justify valuations by allocating their scarce capital towards these AI technology and infrastructure? Because at that time, it was just infrastructure. There was no essentially the monetization piece around it. And and at that time, I also said that, these are the companies right now at the forefront, but I suspected, and I still would say that I don't think we've really seen the real players. I don't think we've seen the cream rise to the top. I think we're still in early days. I think there's all about the build out. And I think there's a lot of things that need to happen first. So that's kind of a quick Coles Notes of where I was at that time in terms of what I saw and what I observed with the whole AI thing. And now here we are again. So point of today is what's changed? Has anything changed? Has the dynamics changed? Has the technology changed or evolved? Has what's the attitude of the markets right now with respect to this? And then ultimately, the ultimate question that we all have to ask is this stuff legit? Because if it's legit, then that's going to trickle down into economic benefits, financial benefits. If it's not legit, then, and it's just kind of a commoditized tool, well, that's going to have trickle down impacts too from a financial economic perspective on that side. So, in terms of where we are, one thing that has changed quite dramatically is the valuations. Literally, the economic financial valuations, companies, Wall Street specifically, are pushing all their chips in, and it's reflective in the economic numbers. More money has been, especially from an American perspective, uh, more money has gone into AI infrastructure investment than consumer spending. That's an unbelievable statistic. Wall Street is financing anything and everything related to AI. You've got a government now that's pretty much pretty much enabling a lot of it by simply not doing anything about it, by not putting guardrails, by not looking at the potential copyright, potential legal implications, potential social implications. The one thing I'm noticing about AI, I think if anything, it might accelerate the level of inequality that we might have in our society. Because I think it's very much going to be a pay to play, pay to access kind of thing. It isn't going to be like the internet, which was just, set up a modem and a telephone line and boom, you're on the internet. Uh, you really got to pay for access. And a lot of people, my kid was even telling me, is like, ChatGPT, it's free. I don't have like, why do I need to pay for it? And I go, well, it's free because you have a limited access and you get a limited amount of compute process. You're not really using all the features. You're getting a very generic scaled down version of it. And you may be allowed to do 5 searches between the hours of 2 and 3 in the morning, and that's your free. If you want to have the full-on access, you got to pay for it. And so we're seeing companies like OpenAI and Google, they're all monetizing, trying to monetize their models, and at various levels of success. Now, is it at levels of success that justify the capital investment at this point? I would probably say no. I think right now they're just trying to sustain a cash flow perspective. We're seeing an evolution now, again, bring it to an investing perspective. You're seeing everybody pushing their chips into for the AI. Corporate is now, they're pushing because of, they're salivating because, hey, I can be as productive with fewer people. Hey, sign me up. So that has implications from an investment perspective, and then from an economic perspective. If more people are put out of work because of AI or automated out because of AI, you're gonna have more people not working. That's gonna have economic impacts. And that's going to have deflationary potentially impacts, which could ultimately feed into uh, lower costs of capital, but ultimately on the flip side, feeding into higher valuations. So that's one of the big changes now is that the markets are all in on AI, and it is driving a significant portion of economic growth on that side. And so as a result, the valuations on a lot of these stocks, the Microsofts, the Metas, and now the Oracles, who are now pushing their chips into heavily into AI infrastructure. Uh, they're all in. And on top of it, and this is the part that kind of makes things a little bit sketchy, is yeah, they're investing a lot of money, these companies, but they're basically investing money. They're basically putting money into each other's companies. You're seeing constant headlines in terms of OpenAI investing in NVIDIA. They're partnering with NVIDIA. They're partnering with Microsoft. OpenAI partnering with Oracle for a 10-year agreement. They're making promises to spend hundreds of billions of dollars on infrastructure. That's happening, and they're basically it's and this is the part where I'm kind of like red flagging is this all like just like a Ponzi scheme? Is this just like a shell game where everybody's just moving money around and recognizing revenue and basically propping up their sales to make their profits look higher? The optics look very much like that. And then on top of it, layer on top of it, a Mad King who's kind of want to get his fingers and wants a piece of the pie and kind of, trolling a lot of these companies to get a cut of that or get a huge discount in terms of getting these companies to build infrastructure. And I think that's where these companies right now and is they are more than happy to, and I know a few of them have talked about this, more than happy to overinvest in this stuff because the perception out there is if they're not in it, they will not be players in this. And so the only company that's not doing this is Apple, who has literally stepped aside from there. I have the new phone, and I honestly have not had a moment to think about using AI, their AI stuff. But all the other ones are more than happy, and they're out there. They're even saying it. It's like we're gonna overinvest. It's okay if we overinvest, and when we throw the capital against the wall, we're okay with some of it not sticking, which is again profound to hear uh, companies like this talking about that. that they're okay to lose money off this. This is like a loss leader. And that's where I get the flashbacks to 1997 to 1999 with the dot-com stuff is it's the same cadence and dialogue that businesses at that time were saying. I'm starting to hear a lot of that right now. And so that's concerning to me from an investment. So that is one thing that has kind of evolved, I would say definitely within the last year and a half. In terms of the technology and all the stuff I talk about being clunky, I think it's still clunky. And I still think it's not ready for AI because I still think it's not consistent. But I do think it's gotten better in the sense that um, the way I've used it is instead of me asking it to go out there in the world and find stuff for me, I find I'm being more effective when I give it data to look at, and then it looks at that subset of data that I've given it and then layers it with what it can find outside. I find the responses that I get now with the type of analysis that I do to be much more complete and much more consistent because I've given it parameters now, where I'm learning to work with this stuff a little bit more in terms of prompting. And I find the responses I get are much more consistent there. So that's a good thing. That's an evolution with the technology. But I think that right now the thing is, if you're just looking at it as a black box and you just tell me something about this, um, I don't know if you're exactly going to get as complete. I think you'll get a more complete answer than maybe a year and a half ago, but I don't think it's still everything you're going to want. And this leads into kind of how I think what this technology reminds me of. There's two things it reminds me of, and this is not me. Well, one is me. This is what the vibe I get when I use this. I feel like when I use this stuff, when I'm doing the prompting and everything, that it's kind of like a choose your own adventure. You ask it a question, it gives you a response, and then you go, okay, if I want to take a look at this aspect of the response, then I just type, do. And in a way, I've structured the when I use ChatGPT at least. I ask it to ask me questions after it and says, would you like me to do more analysis of this? Would you like me to focus on this? It would ask me questions. Would you like me to take out this part? Um, and so in a way, I find myself flashbacking to the times when I'm a kid, we're reading those choose your own adventures. Now, again, totally dating myself, but if you remember those books, there are all these nice little sci-fi books, and it'd be a story, and you read a story, and then you get to a page and go, if you want to find out, if you get to a cave, and it says, do you want to go into the cave? Go to page 83. If you don't want to go into the cave, go to page 42. And it would take you, and the story and you would just keep feeding you to a certain direction of a story, and ultimately you get a story, and every time you read it, then you get a different answer and a different adventure. And that's why I call it choose your own adventure. I find this stuff almost like that. I find when I'm analyzing a company or trying to do an analysis with a company or a data set, it will kind of ask me, like, do you want me to drill deeper into this thing? Do you want me to look at this part? Do you want to analyze this part? Do you want me to take out this part? And I feel like it's just like, yeah, if I want to do this, go to page 42. If I do this, I want to go to page 83. And so it's kind of like that. And I don't know if that's healthy or good or if it's providing enough friction for me because I ultimately at the end of the day we want to learn, and I'm going to get into this when we talk about critical analysis um, or critical analytical thinking, is that a lot of that friction that we need to do analytical thinking kind of gets stripped out. And that leads to my second analogy of AI right now is the first one is it's like a choose your own adventure. The second one, which was I saw this on a TikTok video, and it really makes sense. It's essentially autocomplete on steroids. So think about it, you're typing stuff on your phone and you're starting a word and then it'll autocomplete the word. You're typing something on Word on your word processor, you're typing it, it completes the word, completes the sentence, checks your grammar. That's what I feel like when I type. It's like a big autocomplete. Except the autocomplete is not words or phrases, it's a thought. It's a process. And it's kind of auto-completing your thought. And it's doing that not basically by understanding what you're thinking, it's just doing it by understanding the pattern of what your question is and then auto completing it based on probabilities. And so that's the one thing after using this for now. It's like choose your adventure, go down the rabbit hole kind of thing. Um, and it's kind of like a very autocomplete kind of thing. It kind of like completes your thought, completes your analysis kind of approach to things. So that's one of the things that are kind of jumping out at me right now in its current form. The other thing that I think jumps out at me is, and this gets to, I talked about critical thinking, is I think what AI is very good at right now is it's very good or it's good or decent at first level thinking. And for those of you who've worked with me and those of you who don't listen to my other episodes and materials and stuff I talk about, written about, I talk about first level thinking, second level thinking. And I think a lot of what AI represents is first level thinking kind of analysis, interpretation. First level thinking is just basically taking what's around you and making a decision around it. Interest rates go up. The Bank of Canada increased interest rates. This means that cost of capital goes up. Valuations for stocks go down, being very simplistic. There's a thought process. If this happens, it's like if-then statements. If this happens, then this is going to happen, then this is going to happen. I think AI, as it is right now, is very much first level thinking kind of analysis. So if you ask me, what's the impact of if the US dollar increases in value, it'll give you a first level thought of it. And I think AI, and this is bringing it back for an investing perspective, and I know a lot of people are using, AI now for investment analysis, and it is ripe for disruption. I think a lot of people with CFAs and MBAs and stuff like that are shaking now because there is a high possibility at a first level thinking that AI can do a lot of that first level thinking. Where I think is if that's the case, and we get a lot more AI kind of first level thinking response and analysis and content that's put out there, then ultimately you're going to get mediocre first level thinking analysis. And ultimately, from a perspective of making investment decisions, mediocre performance. You're pretty much gonna just get what everybody else is kind of get. And in a way, AI might be the ingredient to accelerate or validate for a lot of people the whole efficient market hypothesis. Market's efficient when everybody has the same information. Markets will generate a return based on complete information. And so AI, as I said, is very first level kind of thought process and thinking and analysis ultimately might lead to an environment where you're dealing with investment decisions that are just going to yield very mediocre market rate level performance. If you're all about alpha, AI, from where it is right now, I don't know if that's going to get you outperformance right now. And that leads to ultimately where I think it is weak right now, is the second level thinking. It just can't, it's not there. I don't think it's there right now. And second level thinking, for those of you again, to as a refresh, is ultimately challenging traditional ideas, trying to analyze, challenging uh, the status quo and taking other sides. It's taking contrarian kind of viewpoints, contrarian type of analysis. And I think right now, where it is right now, it's not rare right now because the technology is very much you're limited to what the data set has. And I think that differentiation, I think now, people look at like, how do you cope with AI? I think coping with AI is about having that second level mindset, second level thought mindset. If you can challenge and be creative enough to go beyond the first level thinking, and I talk a lot about this, I've written a lot about this, that the people that are really good at investing are people that adopt a second level thinking mindset. And I think it's a critical skill set to have. Uh, and it's a critical analytical thinking skill set to have, I think, in a very distracted world that we're becoming in a world that is becoming all about choose your own adventures. And What's interesting about this, and this is why I'm bringing this up, is there is some research around this that I found really, really interesting that I came across that I wanted to share with you. It's a study that was done by in Oxford University. They did an experiment, and this is a key word. They did an experiment where they trained an LLM on data specifically from a period of time, and they used basically the 1600s. So they took all kinds of scientific texts, all kinds of research at that time, and they fed that from that specific period. And during that period, one of the common scientific, theories at that time was that just the research highlighted was that the Earth was the center of the universe, that there was no sun. The sun was just, moving around and it was out there. This is the 1600s, and there's a lot of texts. Most of the scientific texts revolved around that theory or that premise that the Earth was the center of the universe, not the sun, which we know now. And what was interesting when it stacked the LLM with that kind of data, that kind of information, and then it started to query the LLM with more r- subsequent theories, like Galileo's theories, in terms of now saying, you know what, maybe the sun is the center of the universe and the Earth is rotating around it. It basically it offered that up. They offered prompts there to talk about these theories, and it was quick. Basically, the LLM rejected it. They said that's impossible. It's it's not true. It's impossible, and it basically was saying that's like ludicrous thinking. That's like it basically like was saying Galileo was like a nut job and a quack, and uh, and it was interesting. And again, the part of it is, and that's the takeaway with this research, which is so profound in that sense, is that what these LLMs do is they don't look for truth. They look for patterns. The technology is based on patterns. So if you upload a whole bunch of text saying and data saying Earth is the center of the universe, then it is going to train on that premise. And so when it is challenged on that premise that it has been trained on, it's going to reject it. It's not going to even consider it. It's saying you're nuts. And that's, I guess, one of the premises with LLMs is that it assumes that everything you upload and everything you train it on is right, is correct. And then ultimately, the responses it's going to frame are going to be patterned on the responses of what it's been trained on, even if it's wrong. It cites another example. The Wright brothers, the people first airplane, airplane flight. Um, it uploaded a whole bunch of information in regards to flight and the theories around it, the science around it, and everything like that. And it uploaded everything from a period where nobody had able to fly yet. And so it asked the LLM, there's these group of people, the Wright brothers, they think, they've done some experiments and whatever to say that it is possible to have a human or have a device or a machine fly in the air. And it asked the LLM, is that a reasonable thing? Is that possible? And the LLM said, no, that's impossible. It can't happen. Um, and it even said uh, to achieve flight by a human would take millions of years to achieve it. It says it's not even statistically possible for someone for to fly like a bird. Um, so it basically slammed the Ripper. It's like Ripper. So what's the takeaway here? The takeaway here is, um, and this is the difference right now with AI and everything else, is that as humans, we can challenge. We have that ability to think at a second level. We have the ability to challenge conventional thinking, conventional theories that we're aware of. We're able to push the envelope on that. Like the Wright brothers, what did they do? They said, we believe that it is possible to fly. And so they did experiments, they challenged that assumption and tried to create hypotheses, scientific analysis to prove that it's true. Yeah, you can do it. And that is the difference between right now how we work from an AI perspective and how we work as humans is that we can believe in something. And if we believe in something, we can challenge it and we can go and get evidence to challenge it. We can experiment to challenge it. An LLM cannot do that right now. And I think that's what they're ultimately, the Zuckerbergs and all that want to go there. Like the, concept of sentient thinking, I guess, is revolving around it. So that right now, the technology has evolved. And so the takeaway I want to share here is that, yeah, in just a year and a half, it's come a long way. But that real nugget, that differentiator, it's still not there. And then from that perspective, before I said it's not ready for prime time, I would say now that AI is probably a little bit closer to being ready for prime time, but I don't think it's all there. And putting all of our eggs into that basket, I think, is still a risky play because we just haven't seen the monetization of that. And I think because of these differentiators of what AI is right now, it's going to be hard. And I'll get into like the economics of it in a sec. So the takeaway right now is AI is very limited right now in generating new knowledge. And this is an issue right now because a lot of AI, the LLMs are a product of data. And as we know, these bots are going all over the world, scraping anything under the sun, videos, podcasts, whatever, anything, spreadsheets to train the model because it is limited, and that is the limitation. It is limited in generating new knowledge. It can't, and this is what's happening now is now these companies now, OpenAI, are starting to kind of hit the wall in terms of how much knowledge these models can need. And so what's happening, um, it's now starting to train AIs to create new knowledge, but it's based on existing data or remixing old data into a new form, which is not really creating anything new. And again, this is the limitation right now is humans, we can create knowledge and AI cannot create new knowledge. Cannot, and if it is, it's basically a rehash of the old knowledge. What it's good at doing is it's good at pattern matching. It's getting better at synthesizing the patterns. It's getting better at taking existing data sets and formulating analysis around existing data, but it can't, and this is what somebody wrote, is that it can't imagine a future where it can contradict data, it can challenge data. And so that's the limitation right now. And I think a lot of when this is brought out to the Zuckerbergs, they kind of come back in the open AIs of the world. They acknowledge this, but the way they're presenting their value proposition is, yeah, we can do all of this stuff. Experimentation, second level thing. Yeah, we can do it. But you know what? It's good enough. And that's the value proposition that is coming out now is just saying it's good enough. It may not be able to do everything, but it can do almost everything. And that's better than nothing. And that's kind of the value proposition. And I'm noticing that in China with a lot of the deep seek and everything, when I was getting challenged on it, they were saying, "Yeah, no, I can't do everything, but it can do most stuff, and that's better than nothing." So, here you go. So if we can be, 20%, 30% more productive, well, we don't expect everybody to be 100% more better at doing their jobs or doing things than before, but it's better than nothing. So hey, throw your money at us. Throw your, feel free to throw your $10 billion valuations our way. That's where we are. The other thing, the argument I think right now that's getting a lot more chatter too is the concept of, just literally replacing people. Especially the younger crowd, entry level jobs, that's out there. And the fear is, why do I need to hire a bunch of interns or stuff like that? I can just go create a bunch of agents and let them do everything. So, the premise is, yeah, I think that is in play. And I think there are social economic impacts of that. And I don't think are being factored into it right now. Everybody's just happy to own AI stocks. But do the mind map of this. So if you're a company and you used to hire 30 students a year, and now you have AI and you go, hey, I don't need to hire 30 students. I can get away with 10. So yeah, you're hiring less people and you're saving money. But you're making a pretty big assumption that those 10 new hires are probably going to get paid very little money because you're all about saving money, right? And people are assets. People are not assets, people are cost centers, corporate vibe. You think those 10 people are going to stick around? You think they're going to stick around for 10, 20 years? Heck, even like 2 years, even for 6 months? But so what are you going to do? You got to keep the people around, right? Because you need them. Because if you don't keep those 10 people, what happened to the other 50 people you got in your company that are going to retire, are going to, go away? They're going to leave. They're going to get automated out. How are you going to replace them? You're going to probably, to keep those 10 new hires in there, you're probably going to have to overpay them with all those savings that you created. So, what's the point of getting rid of the 30 people? What's the point of why go through that exercise? You're going to end up overpaying and paying the same amount of cost for less people. It's kind of like canceling out the whole reason why you're doing it, why you're leveraging AI. Because one of the fact of the realities of AI is I think it's going to create a more entrepreneurial and a more flexible and adjustable workforce and a generation of people like that. You know, company loyalty, like who's going to do that? What's this company loyalty crap? We know with the millennials, like people bouncing around. This stuff is just going to accelerate more people just bouncing around. And I think people are just going to take a more entrepreneurial attitude. I know with my kids, I know I'm trying to like nudge them into like thinking out, having as much flexibility instead of going down some specialized path that could just end up and if you play the choose your own adventure game, going down a specific career path, you might end up in a wall, hitting a wall somewhere. It's that kind of thing. So let's play this mind map out that I'm thinking, I'm trying to think, okay, this is going to save companies money and it's going to make companies more productive. Well, if you're going to hire less people, then chances are people that are less loyal to your company, unless you make it really worth staying, which I don't think a lot of corporations do because they don't care. They care about the share price. They're going to leave. And so then all of a sudden, you're going to have a nice competition going on for talent, for people. What does that mean? That's inflationary because you're going to have to pay people more to overcompensate. And then at some point, the companies are going to start overpaying for, in terms of wages. They're going to start looking at their capital investments and they're saying, why am I schlepping so much money into all this AI infrastructure? And then on top of it, I'm going to be paying higher wages to keep what little people that I have in my company from jumping ship for better pay. And I don't think Wall Street and most companies are kind of thinking this all the way through. They're just looking at for the first level of, hey, I can save money, lower my costs, increase my profits short term, increase my share price, increase my stock options. Play this out a bit. I'm trying to play this out. At some point, you can't keep spending, doubling your AI infrastructure investment. As long as maybe if you keep sh playing the shell Ponzi scheme and rotating money amongst the seven, Mag seven, maybe I don't know. But at some point, markets are going to go and investors are going to go, hey, where's my ROI on all this? And if your profits are going down because you have to pay people higher wages, even though you're hiring less people, because they're not going to stick around, and you're paying a lot of money for your infrastructure costs, how is this a profitable? Where's the profitability in here? What is going to happen? You scale back your infrastructure. Maybe you hire more people. So in the short run, yeah, there's probably going to be fewer people hired. Jobs are going to get automated. But I've learned that in the circle of life, it comes back, it comes back to the starting point, which is I wouldn't be surprised after all of this gets through, we go through an iteration of this that more people are going to get hired, we're going to need more people and less tools. The technology will be around, but you're still going to need people because the technology is not there for second level thinking, which is really where we all get paid for. So that's what's jumping out at me or where we are right now. So right now, and that's why everything looks very bubbly. And when the stock market is like the S&P 500 is basically 40% of it, 30% plus or minus are driven valuations are driven by 10 companies. That's not sustainable. And I haven't gone over the Mad King stuff. I'm not even going to go there today. It's a Mad King free episode. The other area that people are talking about, and I guess Wall Street and most of the tech companies are all salivating on is that one of the impacts of AI is not having to the code kind of concept. And there's a lot of sort of analysis that's showing that, yeah, you can get AI to write all the code and QA everything and test and all everything, but you can do that until you can't. And there's a lot of case studies. And AI, Amazon has had a serious issue. It was in the Bloomberg, talked about it, was they're heavy hard in the AWS. They're heavily hard into the automated coding, AI coding mentality. And then they ran into some serious issues and they couldn't figure out what the AI did. And so guess what? They needed people to figure it out. And when you're in a very mission critical kind of industry like that relies on software, relies on coding, those kinds of screw ups can be very catastrophic for a company. Forget about the Amazon, they'll throw money at it, but small and medium sized businesses, they're not going to be able to deal with that. It can knock companies out of business. I don't think that's getting a lot of talk about it. You're just hearing it all about, oh, I don't need programmers. Forget about programming. Don't be a software developer anymore. Well, so that's the vibe right. The vibe right now is it's very much kind of like a video game. It is AI is very much like a video game. First of all, you know, you choose your player, like either your Anthropic or ChatGPT or Claude or Perplexity, Gemini. Choose your player, stack it up, and then choose your adventure. And I think the issue right now with I think AI not being ready for prime time, it's closer, but I don't think it's ready, is it still doesn't do critical thinking very well at all. As I said, the second level thinking I was talking about, it just doesn't replace that level of critical thinking. And I think what's the danger also with that is I think for people like me, uh, I started with me, going to school, I was exposed to technology, but there was friction. When we were in school, we learned about things, there was friction. It wasn't, we had to write a book report. And to write a book report, A, you had to read a book, you had to understand the concepts. B, you had to make notes. The idea of writing your thoughts or facts. See, then sitting back and then actually articulating a thought process around expressing your opinions and your observations around that book. These are friction activities and it requires critical thinking. And the whole point of that exercise wasn't just to write the book report. It is to go through the process of challenging your brain to exercise your brain to critically evaluate that book. From researching to things to writing your thoughts, putting together a draft, and analyzing. There was a process there that I learned in school that we all learn, and you learn it in high school, you learn it in university, critical thinking, critical analysis, challenge, second level thinking, challenging conventional wisdom. And as I said, AI, the risk with AI is it's kind of taken that piece away. It's creating a very much more frictionless. It's all about the end product rather than the process. And part of learning, part of education is understanding the friction, is coping with that friction, coping with the stresses around that friction, and coping around the challenges of that friction. You learn from making mistakes. And the whole premise with AI is it does all of that for you. So you don't have to have that friction anymore. And this is a concern that the technology is going a long way to diminishing our kids' ability to think critically. And I think this is something the schools and universities are grappling with. And I think as parents, we have to grapple with it. And so my take on AI is it's not ready for prime time. I think it's getting closer, but I think it's also a generational thing in the sense that I think AI technology is going to have better benefits for older people than the younger people. And I bring it back to investing. As I said, I'm trained to learn how to make investment decisions. I'm trained how to analyze companies. I'm trained to critically think on evaluating companies. I know financial ratios. I've been trained and I've gone through a lot of stresses and struggles to get to a point where I know that. So when I enter something in ChatGPT to analyze or generate some financial ratios for me, and I see those ratios, I can critically look at them and say what they are and what they make sense. If you haven't been trained in investing or in finance or in business and you see those ratios, what are you going to do with them? They're just numbers. You have no sense of to critically analyze them and you have no ability to provide context with them. And so I'm kind of in a qualm right now because I said I teach this stuff and and if you go in my courses and my students here know this, uh, I have spreadsheets in there and I've created spreadsheets and I've put formulas in. And what I've done, what I asked my students to do is, hey, analyze a company, take a financial statement, and literally enter the numbers into the spreadsheet, and it'll generate your output. But it's not convenient because I gotta answer this. But I've been doing this for like 20 plus years and I've been doing it, entering numbers into my spreadsheets and doing it. But it did that. It was a very friction filled exercise. But by doing that work, I trained myself to critically spot things in the data, in the analysis, in the ratios. And so I've critically trained myself to think of those things. If you're analyzing a company, and you're putting stuff in ChatGPT and it just spews out a bunch of ratios, and you haven't been trained to do that, like how are you making decisions? Because we're looking at the end point, we're not looking at the process of calculating those ratios. You know what my teachers always say, show your work, right? Well, with AI, you can get it to AI to show your work. And actually, I do actually do that. I actually ask AI, don't just generate the ratios for me. Show me how you got them. Show your work. So I can critically look at their thought process. I find that's more helpful. It's a small little tip I'm giving you in terms of your analyzing financial analysis. Ask it to show its work. So one of the other things that I've observed now, like, again, a year and a half now, we're further along, is that, um, I talk about inequality. There could be like serious levels of education could be impacted here from a learning perspective. In that, I think people that are in high school and elementary school, it's really important that we get them to have some friction in their learning, uh, so that ultimately, when they do interact with these tools, and they will, that when they look at the analysis and when look at the output that comes from them, that they'll have a bit of a better, uh, they can look at it more critically and make more informed and better decisions. Because ultimately, that's going to separate people. That always will separate people. First level thinking, second level thinking. The people that are really great investors that I've worked with, that I see, they have that second level thinking mindset. And I think it still applies when you're leveraging AI, because AI is very weak at second level thinking. It's good at first level thinking, but the people that do really well have that second level mindset. And it's about applying that second level mindset when you're interacting and having that awareness of, hey, this is not, I need more than this. I need to think about it more. So those are what I see right now. I think this is where we are right now with AI. I think we're from an investment perspective. I think there's a lot of capital going on here. It's going to be really hard for these companies to justify high return on invested capital to cover the high cost of capital investment that they put into it. That's a flag. And then the fact of the matter is, we still haven't seen the technology at its essence right now, while evolving. I still don't think it's ready for prime time, but I do see value and benefits in it, but I don't know if it's a collective benefit. And I don't think it's maybe the benefit that a lot of companies think they're going to get. And I don't think Wall Street and corporate offices have gone down the rabbit hole enough to think what could happen, that they might save money in the short term, but in terms of labor costs and in terms of capital over investment, they might actually be doing more damage to their companies from a financial perspective in the medium to long term. But Wall Street isn't even there at. They're just like throw money at the wall, and yeah, if it doesn't pan out, well, whatever. At least we did it. We're in the game, and I think that's where we are right now. So be careful. We gotta be careful. It's a kind of a very, very, yeah. I talk about cringe investing. Yeah, this is kind of cringy. It's promising. I think there's a lot of promising. And at the end of the day, what happened with the dot-com issues? Yeah, there was a crash. The markets worked. Companies that had no business being in business got taken out. And what was left? The capital gets reinvested into areas, into companies that generate strong returns on capital. Those companies evolved. The technology evolved. I don't think AI is going away. I think there will be new players in AI, but very much everything right now has a very bubbly .com-ish type value. But AI is not going away. It'll evolve. And that's the part from an investing perspective. You have to keep that one eye open right now. That's what I'm trying to do. And this is what I'm seeing in terms of and I just wanted to share these elements with you in terms of now how I think this is all evolving from, excuse me, from a technology perspective and from an investing perspective, how we make investment decisions and around all this, the investment opportunities that are around it. So I hope I gave you some ideas to think about and ponder on and yeah, take it for what it is. All right. So that's all I got for you today. If you want some more info, more insights, and takes on everything, you can find me on my website, sageinvestors.ca. You'll find more information about the courses that I teach, my investing courses that I teach on stocks and ETFs. If you want to find my additional takes and observations on what's going on in the markets, You can find me there. You can find me on the socials, specifically Blue Sky, Threads, YouTube, Apple Podcasts. Just do a search for Sage Investors and you'll find me. LinkedIn, we have a company page there too. You can find all our takes, all our observations, and methods you can get reach out to us and contact us if you need help and assistance with educating yourself and better being able to frame investment decisions on your own. So thanks for listening in. Thanks for watching in. My name again is Aman Reina from Sage Investors. Thanks for jumping on here, and we'll catch you again another time. Take care. Bye bye.